What's up YouTube, it's Todd here with Taste Tracker, and today I have another wheel account challenge. This started off as the Apple wheel, then morphed into the AMAT, then I added a DAO put, and then today I just added another AMAT. So since we last met, there was around 6,000 in here before. Yes, 6,000. I deposited 605 from my paycheck last Friday. Then I dumped about $8,083 extra that I had from closing cost of my house from last week that I said I sold. So that puts me up here to around 15,000. Actually, if we go back to, let's go to home. The total here is that I deposited 14.69 thousand, and I'm up 5% on that money to 15.44. Of course, it's not 444. That was earlier in the day. So if we take a look at Apple, when I put this on, it was right around this area, and I was afraid it would potentially either roll over, excuse me, slightly, or even a hard rollover. We can see MACD and RSI were pretty extended. Since then, it has continued to go up, which, that's the risk you take with taking profits. Generally speaking, I, at the time, did not have enough in the account to take ownership of Apple, so I was trying to not get assigned. Of course, at this point, I could. If that was the only position I was in. But at that time, I didn't want to push my luck and continually roll up the strike and then be stuck in a position where it comes down and I basically have to take ownership and then sell covered calls. As much as possible, I want to avoid selling covered calls. At that point, what always ends up happening to me, and I'm sure you're like me, where it will come down hard and your cost basis is way up here, and so you're collecting pennies, and so it doesn't even make sense to do covered calls. And finally, after 2 weeks of it being down here, you break down and you sell a covered call for $5, like a literal $5, so 0.05, and then um, and then inevitably a week later it shoots up through, and this time it really goes through your break even, and so now you're losing money. So what do you do? Do you hold through that cover call and hope that it comes back down? If you would have never sold it to begin with, obviously you could have closed out your shares and collected on and made a nice profit. Um, and if you decide to hold, which is what you'll decide to do because it feels dirty to buy back that call that you sold, right around that time it'll come back down through and you won't be able to. So you'll end up getting missing the mark each step of the way. That seems to be what always happens. So where possible, I'm going to try to not take ownership. That way I don't get pegged into a certain price. And so what that means, very real, is that I'm missing out on opportunities like this where it continues to rise up. Again, I don't really expect this to maintain this momentum. We're already pretty overbought and earnings is coming up. Running up into earnings is very common. So sometimes earnings is the apex that will then cause it to roll over because earnings, even if they're good, they don't meet expectations or because of the run up prior to earnings. Sometimes that's 2 or 3 days before. So any day now, this could completely crash and burn, back down here to the 50-day, which if that does that, it's going to pull the indices down naturally because of the percentage of those that it occupies. So obviously that's going to be a pretty red day on SPY, which means the rest of the market is going to want to follow it down. So I definitely expect some down days here coming up. It's Wednesday here, so I doubt it's going to be the end of this week. It's more likely going to be the end of, and middle to end of next week is what I would guess. Could totally be wrong. So this is Apple, and I'm waiting for this to sort of have that reset. Hold on, let me pause. So I'm waiting for that reset in order to get back in. And instead of sitting on my hands, which again isn't necessarily a bad idea, especially with the style I'm playing in this account, which is all naked puts. Um, Waiting for the entire market to correct, even if it is just a little bit. Sometimes it's good to give up this little bit of profit here and then get a really nice entry if that is what comes to pass. However, obviously don't know. But in the meantime, I decided that I would put a position on AMAT. AMAT to me looked like it was primed to have a quick jump, and indeed it has had a bit of a jump. I put it on around here. Let's see what day I actually put it on instead of just guessing. Open 7-8. Yes. So I put it on the bounce down here on the 100-day. Since then, it's had 4 nice sessions go basically straight up. Today, it's confirming the 20-day. That doesn't look at all to me suspicious or concerning. We can look at MACD. This still looks constructive. It's still working its way up. Confirmation is actually a great opportunity to jump in when it's when the stock is telling you, hey, we're good with this level, no concerns about being at this price at this moment, and then it's going to run higher. So I would expect this to have a green end of the week, assuming everything else market-wise is fine. RSI looks good. So from this perspective, this chart looked great to me. And we're kind of making higher highs here, even though it is ever so slightly. It hasn't broken the all-time high back here. But definitely seems like it's working that way. And then 100-day, the SMAs are working as great support. Again, if you watched last video, 200-day was down here, and it definitely needed some time to catch up before I thought it would be realistic to go down the whole way to the 200-day. So that's what I was thinking with AMAT. So I entered that position in the last video, and you can see here now I have 2. Well, today kind of had this dip, and around this point, I thought, well, maybe we could come up and see something like this where we could see these highs again. And there was about $100 difference in the swing of the price. So it's kind of tough seeing your account go from whatever, $400 down to $300. And since we sold this position, we want the value to decrease and then go back up again, which is what I was thinking it could potentially do. So I thought, well, I'll put on a second position here on AMAT that I definitely won't intend on holding long. The other AMAT position, I don't mind holding longer. That was my intention, but this position would just be a couple hours. Well, obviously it went up a bit and then kind of skidded out here. But again, I'm not concerned. I think in the next day or two, I'll be able to close that additional one. Why wouldn't I hold on to that one? Well, if I come over here, I can see that I have 16,000 collateral needed in order to take assignment of these shares for Dow and AMAT for the one, and then another 13 for the other AMAT. So that would be, $30,000. And in this, at the moment, I only have $15,000. So I'm not comfortable being that far. Even like with Apple, I had around $3,000 to $5,000. So it would have only been a $7,000 difference between what I needed to deposit in the account to bring it up to take ownership of everything. So sitting at 15, or I need to deposit another 15. So that's a little bit more than what I'm comfortable holding. So originally I sold this call today to be the same expiration, July 30th, same strike 134. But then when things didn't immediately go my way, then I rolled that out another expiration for another credit. So let's go in here. I collected 57 for that roll. Now, part of that obviously is the time value that I'm rolling it out. But the other is that the price of the stock continued to go down. And with that comes an increase in volatility as well. So anyway, I'm getting a pretty nice premium to roll. And I'm rolling the one that I'm not planning on holding on to permanently. Whereas this one, I don't mind if I get assigned. If I roll this one out, it's less likely to get assigned because it has more extrinsic value in it. And so that's the deal with that. Even though I originally put it on for this expiration, it didn't immediately turn my way. So of course, that's sort of the way it goes. I could have gone in here and done the scale in and scale out and added another strike, but I was planning on keeping it separate. That way I could just have sort of a clean history on this one and a clean history on this one where it's only the position um, as it was intended to be, which is one contract. And splitting this off, rolling this to a different expiration, kind of just confirms my suspicion that I wanted to treat it as a different position altogether. Obviously, to split these apart and roll a portion of it wouldn't really work out too well. Tasty Tracker is not set up to be able to split a current portion out to a different expiration, although that would be a really cool feature. So I won't write that off. All right, just added that to the backlog. Okay, so the last thing I need to go over here is Dow. So, airlines are kind of down and out at the moment. Again, sort of like AMAT, where I saw that as an opportunity that things are probably oversold enough that in the next week or two, we should see a fairly decent bounce. So if we go over here to the Dow position, I have a 42 strike, which is the whole way down here. At the time I sold it, that was 712. So I come over here, it's on this date. So it was basically an at the money position when I entered it, but I thought even so there was pretty good support here that we wouldn't be dipping much below this point. At this point, we still haven't. We're at all but $41. So 42 is pretty close, but yet we're very oversold. I think that we definitely have the potential to bounce here, especially as you can see, I have earnings here. Estimated was 138 loss, and they only lost $1.07. So that was actually a surprise to the upside, even though this stock isn't necessarily reacting well. But I think we're still set up here in a position where if we zoom out here, after the COVID crash, we make some nice progress, but we've been treading water here basically all of 2021, and we're not up at the highs pre-COVID, which does make sense. Travel isn't quite where it has been, although you hear conflicting reports where things are extremely backed up because so many people are trying to make up for losing their vacation from last year. Anyway, I think airlines are poised to make a comeback here relatively shortly. I think this is close to the bottom. I don't think we have much more bottom. It could definitely come down to maybe 38, but that's still within a margin of error that I shouldn't get assigned, especially if I keep a decent time, distance to expiration. I shouldn't get assigned. But that one again was a longer term hold because it's only a $40 stock. That means I need $4,000 total to take ownership of those 100 shares, and then pair that with a $13,000 stock like AMAT or Apple, and then you're looking somewhere in the range of 17,000 total to take ownership of both. So being that I'm already at 15,000, I should be able to get to 17,000 between proceeds from these positions as well as continuing to contribute with money as I have it available from my regular job paycheck, etc. 2,000 is something that I could come up with, especially if I needed to take assignment. I have enough sitting and savings, etc., that I could draw on that to bring this up to ownership. So that is sort of the sweet spot. I don't want to be too much above $2,000 or $3,000 more than what I have in the account in order to take ownership of everything. So again, this is why this other AMAT call the position put has to go at some point because I don't want it. I don't want to hang on it too long and risk getting assigned, and then having to close out it or another position when I'm not ready to, as opposed to taking ownership. The whole point of this account is if I need to, because the market has been trickier in 2021, it has less of a clear direction. It's a little bit more random. I'm choosing a safer strategy than put verticals. Put verticals can be fairly safe, but when it's unpredictable, more unpredictable than normal, you can get burned a lot. I've been burned a lot this year. I know a lot of other people have been burned a lot. So the whole point with this account is that I'm only doing naked puts. If worse comes to worse, I'll take ownership and I'll hold until a random week later when it's up above where it was when I got assigned. So that is the whole point. This is a fairly risk-free, if you want to think of it that way, that worse comes to worse, I'll take the shares, and they're companies that I don't mind owning 100 shares of, but that all breaks down if you start playing with fire, like I have done here, and have a second position in AMAT. So I have a closing order here. I'm going to set up. And I'm actually going to put that for 200. That sounds crazy. And so it might be something a little bit less than that, but I've collected 315 on it, so it definitely to make this short-term hold worth my while. Let's go ahead and set it for 215. So I get a quick 100. Hopefully that will close in the morning tomorrow, especially if there's a nice green candle right out of the gate tomorrow. But yeah, again, that's closing the further dated one. I'll keep the closer dated one, and that will be, you know, regularly scheduled kind of thing. I have a rolling order set up here for the Dow one to get $30 credit, which is pretty ideal for me. And a lot of times those fill first thing in the morning with sort of the crazy swings you get right out of the gate. And so it hovers between 20 and 25 bucks, but I'll just have a working order for 30 and then it will fill whenever it needs to. It's in no rush. I still have set 16 days here before expiration. So, you know, if it holds on longer, you know, I have 16 days. I can always lower this in a week or two if it didn't hit, but chances are it will hit in the next day or two, and I'll get a little bit inflated premium than what it's currently going for. So yeah, so that's how I work that. This last one, I don't have a rolling order set up yet. That's just because there's no need to at this point. Again, there's 16 days left. I'll just let that one ride a little bit more. Okay, so I think that's pretty much all I wanted to cover so far. It's again around 5%, but I'll have the exact dollar figure out on the title card. So thanks, and I'll talk to you next time.